Good morning, this is Ken at Tortoise Capital with a review of the weekend trading report for August 31st, 2019. Market is in bullish volatile conditions. The 10-day and 3-day look-back period overbought. Price with respect to the 200-day moving average, white bullish, so it's improved. ADX is neutral. The risk index is the 30-period moving average of the VIX divided by the 10. It's at 0.96, so we're into risk off. 1.0 is the boundary between risk on and risk off. Looking back at the last 5,000 trading days, it gives us a risk z-score of minus 0.48. You can see the 180-day histogram of that indicator here. So we're still climbing the wall of worry on the swing side. Still looking favorable for the long side swings. These are the current holdings for August. We'll start a new cycle in September with these symbols here. Theoretical exposure of ETF2s at 20%. On the weekly, we had a recovery with a higher low, closed strong, but still at the bottom of the dragon. You can see the mechanical entries and exits for the support and resistance levels. We are in the fall at the midpoint of the Red River. 3 upside price targets, the first 3 downside price targets. Still, it has to prove that it can get back above that PSAR flip. Otherwise, this is still looking vulnerable. On a monthly basis, closed in the upper half after a scare down to the dragon's spine. We are in fall and just re-entering the summer here. So I really take this as a positive sign that the sell-off here and here was lower than compared to the big sell-off at the end of 2018. So this is still starting to look favorable. It's really got to get above this, about 303, to be persuasive. Some quick looks at the ETF 2 portfolios. Still mostly maybe 2/3 cash, 1/3 buy signals. Defensive plays are dominating. Same thing in the ETF 32 portfolio. XLP and technology have been the 2 clear winners. These top 5 have been just great. Home Depot, Apple, Procter, Coke, Verizon. Walmart, McDonald's have been moving along smartly as well. Home Depot was the real big winner this week. Intel, United Tech were pretty good. CAT and 3M had some nice bounces off some bottoms. So this may be an opportunity to get on board a reversal in the XLB sector. It's hard for me to see how that gets sustained, though, given the slowing economy. Sector spiders, again, about 2/3 on cash signals, defensive plays dominating. ETF 2 report, 20 and 80 on invested in cash based on the 2 symbols that are the strongest. Inside the sector spiders, it's, again, tech and staples. World market model. U.S. is about evenly split between slightly above or slightly below the database average. Strength still globally as well as the U.S. staples and utilities. ETF 30, the top symbols. The home builders is of interest. This is green and white, so that's green and white. That's was good, now great. Exploit new strength. It's available for turbo, and it's a recognition of new leadership. And then old leadership would be that minimum volatility index fund, for example. You know, white and green suggest what was great is now just good. And the daily volatility based on the last 30 days. Shift into the daily. The daily health check closed near the top of the 10-day. Held support at the crucial level. Now it's got a breakout above the support level at 294 and some change. Still early in the spring. This was that first threat at a sell-off here, but it held. Handful of dojis, a couple auto framers testing out well. No breakouts on the NDX. Same with the ETFs, no breakouts on the NDX, a handful of dojis. Latin America oil exploration looking good. We've been concerned about this silver getting overheated, so this may be the time to lock those gains in. Pinch and stretch, still a couple of super pinch candidates. The defensive plays have been dominating. Cisco and United Health, in my view, could be deeply discounted quality companies on sale, and play it accordingly. RLFF, a handful of auto framers that test out well, including old swing reliable Win. Top shelf, these are the symbols, the most ATRs below their RL270, so that's going to be like deep discounted value plays. Back to the Bollinger Band median. And then in the red on the bottom shelf, the most ATRs above their own RL270, these are potential strength leaders. Lots of good setups to choose from. This is all the mechanical framing data based on the highest reward to risk ratio. Four seasons of MACD, still mostly a spring kind of a season. This almost gives you a feel for the type of weather this cycle has featured. Lots to choose from here in the multi-time frame NDX summary. Defensive plays. Mexico looks the strongest to me. And in the ETFs, it's Home Depot clearly. And one last flash tree for the slides. And that's everything I want to cover tonight. Keep your risk measured and your powder dry.